the economy. And I wanted your viewpoint on the economy. When we look at the stock market, we see it continually moving up. We see housing, they're telling us it's incredible. Prices are going up. Everyone's buying. GDP, unemployment, manipulated. Actually, a lot of stuff is manipulated, but these two are they really stand out as being really manipulated right in front of us. In your viewpoint, when you look at all of this and things I didn't even mention, how do you see the economy doing? Have we improved? Has the economy gotten a lot better since 2008?
No. What's happened, Dave, is they have managed to inflate asset prices. Now, one of my pet peeves about the housing recovery is that they keep talking about rising prices as if that's a good thing. And I've written a blog post called The Dark Side of Higher Home Prices. What higher home prices do are they make it more unaffordable for people to buy homes. And this housing recovery, because they've boosted the prices so high and they've effectively locked millennials out of the housing market, has been in price only. And they keep talking about a recovery, but what's happened in the housing market, especially in new home sales. Now, new home sales, as you're aware, Dave, they create enormous economic activity. You got to build things, you put people to work. When you sell existing homes, it's just people moving in and out of the same home that's already there. There's no real new value. A real estate agent makes a commission. But with new home sales, they are at levels last seen in the 60s and 70s, and no one is reporting on it. They reported on these blowout sales of homes in, I think it was the August numbers, and there were 650,000 new homes sold in August on a seasonally adjusted basis. Now, that is the highest they've been since 2010. In 1960s, there were, I think, 660,000 homes sold as their peak in the 1960s. So we have home sales where the country is now 59% larger, and we have the same amount of new home sales being sold as there were when the population was much smaller. And they're calling it a recovery, and they're using words like solid and robust. And this is evidence that the housing market is back. It's not. It's evidence that housing prices are too expensive.
I mean, when you look around at different neighborhoods, actually, I'm seeing prices actually come down now, but what drove the prices up?
Well, a couple of reasons. First of all, when you have low interest rates or zero interest rates, mortgages are cheap. Also, but that's not really what's driving it, because 40-50% of new homes and existing home sales have been predominantly with cash. And that's because people need a place to park their cash because they can't put it in a bank account and get interest, so they put it into real estate. They know real estate goes up, or they buy it to get rental income. So the home sales are being boosted, not the home sales, the home prices are being boosted clearly by monetary policy, zero interest rates. It makes real estate an attractive place to park money.
So do you see this real estate market, is this solely being supported by investors, hedge funds, maybe foreign investors? What about the people? Are they actually purchasing the home? Is it more so with investors?
Well, it's a combination. You know where you do have people being involved, but it's the same people that are benefiting from the low interest rate policy. So, for example, in San Francisco, Silicon Valley, they actually make loans on the basis of what your stock options are. So you can go to San Francisco. It's very expensive to buy a home in Silicon Valley, some of the most expensive areas, but they are buying homes there. The other place where there, I think 6 out of the 7 or 10 top 10 home prices are in the Washington, D.C. metro area. That's because you have a government bubble, because government spending across the board in the states has gone down since 2008, but government hasn't gotten any smaller since the financial crisis. In fact, that's where all the stimulus is. You got government jobs, government contracts, people making, husband and wife making $100,000 each in decent jobs working in the government. They can afford to buy houses. So you have these areas, these pockets, and I think they're New York, San Francisco, and Washington that benefit from government largesse and central bank policies, which help those areas, but it doesn't trickle down to the rest of the economy. So, and of course, that's also where the foreigners put their money in real estate.
So do you see the housing market mimicking what we had back in 2008?
No, because what happened in 2008 is there was broad-based participation of the average person can go get the liar loan and buy a house, trade up, and you had I think 1.5 million new homes sold in 2005. As I mentioned, now you're in the 600,000 range. So the sales are way down. It's not like everyone's participating in getting those mortgages, because why would a bank want to lend money to anyone at 3-4% when they can go into the derivatives casino and make a fortune?
So you're saying right now, and when we look back at 2008, that was a people-driven housing market.
Mm-hmm.
When we look at the housing market today, it's not really a people-driven type of market. It's more of an investor, foreign investor, where they're parking cash. Do you see let me just ask you this, is housing in a bubble right now?
Well, it's in a bubble in the sense that the prices are higher, but it's not in a bubble in the sense that too many people are owning too many houses, because during this so-called housing recovery, I'm sure you've heard, not the labor participation rate, that's down too, but the home ownership rate is down at the lowest level since they started calculating it in like 1963. So it's not a bubble in the sense that there's this widespread participation, cab drivers are buying 2 and 3 homes and so on. Shoe shine boys, it's basically investors bidding the prices up.
So where do you see the housing market going moving forward?
Well, housing is just like the stock market now. They're both captive and held to government policies and government intervention. So Bernanke and Yellen both have said that the reason for their policies was to create a wealth effect, which you create by boosting home prices and boosting stock prices. So that leads to the point is they're going to try to do whatever they can to keep the asset prices up, not necessarily to improve the participation of people making money from those. They're hoping that the people that do have homes, which are the older people, the boomers, that they're going to now feel richer and they're going to spend money, and that's going to stimulate the economy. That's the Keynesian model, that somehow spending is the best thing, not the investment.
Apparently that's not working.
Well, it depends on what's it works if you have assets.
Right.
And they're being boosted, and you're just sitting back and watching your house price go higher, or just buying any stock and riding the coattails of central banks buying stocks, and they're going higher. But what the planners, I'm sure they realize this, and they always talk about wealth inequality, but the average person doesn't have a massive stock portfolio, and more, they don't own a house. So they're not benefiting from that. And when they say lower gas prices are a benefit too, Dave, a lot of people don't drive either. So they're not benefiting from that supposed benefit of the economy.
It's funny when you mention gas prices. When they came down lower, I didn't look at my wallet and go, "Whoa, look, I have all this extra cash. Let me go into the stores and purchase." I was like, "Okay, I'm getting more from my my currency right now, so I can fill up the car for the same price where I used to fill it up halfway." Right. But that's all I did.
Or you paid your insurance premiums, or you paid
insurance, right?
Whatever else. It's not like it gave you discretionary income because your gas price went down.
That's true. Let's move on to gold. What is your view on the precious metals market? Do you see gold being suppressed?
Always. And the reason gold is suppressed is because it has to be, because if you're a central bank and you want to manipulate an outcome, which is we want asset prices to rise, we want the dollar to go higher, whatever policy it is that central banks want to impose by manipulating interest rates, by definition, they also have to manipulate the price of gold, because the price of gold can't rise in tandem with the dollar, because gold is competition for the dollar. So I believe that they're constantly manipulating the gold price. And you only have to go back to from 1934 to 1971, when the central banks fixed the price of gold at $35. That meant they knew they had to keep a stable price of gold. Once gold became out of the monetary system in 1971, when Nixon took the world off the Bretton Woods gold standard, people thought, oh, well, now that it's not a monetary metal and it's not required in the monetary system, that somehow gold would go down because people would only want it for trinkets and jewelry. So they removed most of the demand because it was no longer monetary. Well, that's not true. So now they know that people still view gold as a monetary metal that has to be suppressed.
If they're continually telling us how great the dollar is, how strong it is, that gold is just a relic used for jewelry, why is it so important that every couple of days we see thousands of paper contracts being thrown at the gold market and they suppress gold. Why is it so important that they continually do this?
I think it's because they want to make the paper game the place where the price of gold is set, not the physical markets. And they have achieved that, because if you saw the silver demand in the last 3 years, it went through the roof. There was a deficit in silver, and there was a massive amount of demand for silver, and the price went down. This year, you have the exact opposite. You have Shanghai Gold Exchange withdrawals down 25%. Indian silver imports reported today down 50% year over year. Gold imports down 60%. Chinese and Russian central bank buying down. You have U.S. mint sales, Perth mint sales, silver sales down the last few months, but yet the price rises. Why is that? It's because of the paper. They've made gold and silver into a product where they created demand for COMEX long contracts and for ETFs. So the gold price and silver prices rose this year on the back of ETF demand, which is Western demand, which means when the gold and the silver are in the ETFs, well, they control that. They can do whatever. You never know what happens to the gold and the ETF until you go to ask for it, like this extra company and the Deutsche Bank one, where the guy said, okay, I'm coming for my delivery. And they say, well, what do you mean you're coming for your delivery? You got shares. And that's what they want. They want to create the price of gold and silver as being purely a paper concept. And also, if you look at the Swiss National Bank, they're buying mining shares. They haven't bought any physical gold in years. So what they're trying to do is the central banks are trying to say, look, if you have to have gold, you have to have silver. Look, there's these ETFs. You can buy futures. It's great. You can buy mining shares. You can have them in your account. It makes it a lot easier for them to control the system, because that's when they can create a number of short contracts out of thin air and sell them when they don't want the price to go too high. Or they can short the stocks, or they can sell the stocks. It's much harder to play that game when the price is based on physical supply and demand. So if they remove the incentive and they remove the concept of having gold and silver, physical drive the price, then they can control the price. And that's what they've done this year.
Many people are out there saying that gold and silver, they're going to, skyrocket. They're going to be going to 5,000, 10,000. Where do you see gold and silver going this year?
Well, I don't make price predictions, but I think gold and silver will go where they want it to go, because the price is set at the COMEX casino. And I'm fond of saying you don't beat the casino at the casino. It's a rigged system. It'll go wherever they think it needs to go, and there'll be a variety of factors. If the dollar is going down too low, then they will smack gold down. If they need, for other reasons, for gold and silver to go higher, they will allow it to go higher. If they need their mining portfolios to go up, you need some underlying support for the gold and silver. So that's what's going to happen. It's not such that we now have a circumstance where everyone wants gold. Well, that's not true this year. The demand for physical gold, as I just outlined, is down this year. So is the demand for physical. It's way down, but the price is going up. And that highlights the price goes where they want it to go based on investor demand. And unfortunately, investor demand now means today, Dave, central banks and their proxies, such as the Norwegian central bank using the Norwegian sovereign wealth fund. They buy mining shares. They're in the market. These companies also own GDX and SLV. They own part of the market, and the danger is they're becoming the market. So the hopes that we might have that somehow, the free market is going to take over, not if the central banks exert more and more control over it.
Yeah, the central banks, they're in total control right now. I mean, they're controlling every aspect of the economy, actually, if you look at everything. And eventually, I think they will lose control. Something will come out of left field that they don't expect, and they won't be able to control what is happening.
And let me explain what I think will happen in that case.
Okay.
So Janet Yellen just gave a speech the other day at Jackson Hole. She's talking rate hikes out of both sides of her mouth. She's also saying, well, when we have the next recession, future policymakers should think about a $2 trillion QE. But that $2 trillion QE shouldn't be like the past QEs. It should be more like what the other central banks are doing, and we should buy a broader range of assets. So let's say we have a stock market. And she said also, which may require legislation. Well, let's say the stock market goes down, a nice big collapse. Well, the plunge protection team can't put together this thing quick enough. The exchange stabilization fund doesn't have enough money in it. Well, Janet Yellen's already said, hey, how about $2 trillion? We go to Congress, we say, look, the stock market is down, but we know how to make it go back up. Let us print $2 trillion, and now we're going to buy shares. And there, the problem will be fixed. And the problem with central banks buying equities is much greater than anyone can possibly imagine. Because once they buy equities, that means they can start to control. They're not buying non-voting shares. They're buying ordinary shares just like everybody else, the Swiss National Bank, the Bank of Japan. Once they start to own larger portions of shares, they can pick the directors. They can pick the management. They can set the policies. They can decide that it's in the best interest of this company now to issue bonds. They need to raise money. Well, who's going to buy the bonds? Well, we'll buy the bonds. You see, because once the central banks decide they can buy equities and they can buy bonds, they can control companies and have them issue bonds that they buy. That's where I see this whole thing going, is not into some collapse where now all of a sudden we get the normal Austrian cycle where now free markets take over, the bad debt is liquidated. No, the bad debt doesn't get liquidated. It gets bought up by these banks. And then you have, when they own these companies, now they're government wards and they can do the government's bidding. They don't have to make a profit because the government's there to prop them up. I noticed the Swiss National Bank owns Tesla. They own LinkedIn. These central bank buying, they're not based on buying they shouldn't even be buying equities anyway, David. When they buy equities, they don't buy the ones that are paying dividends and produce a product. They buy these speculative stocks. So once the government or the central banks can do this and buy back shares, they actually can enrich themselves. I saw an article in Bloomberg basically saying that, central banks expected to save the world and make their government money. And then Wall Street Journal said, what if central banks start buying equities? And it was like this cheerful thing. It could boost markets. I mean, they're cheering on. So I view this as a troika between the government, central banks, and the media to take over the economy. And they talk about cashless all the time. That's another level of control. So I don't view this whole game as having an end game where it collapses and now the free market takes over, gold and silver go higher, and we all live happily ever after. I view this as a much darker and more totalitarian scenario that's unfolding right now.
Well, we do see it unfolding. I mean, Bank of Japan, I mean, they're buying equities. ECB is buying corporate debt. Well, they're all buying corporate debt. The Fed has a huge amount of toxic real estate on its books. From every aspect, they are the market.
Correct.
They are the economy. And
what's to stop them from going further? There's 10 trillion in QA now. Why not 20? Why not 30 trillion? Why not 40 trillion? You know, power needs to grow. They can't just say, well, okay, that's it. We've done enough.
But there are other things in play. Yes, we're talking about the private Western Central Bank countries. But then we have other countries out there that are looking at what is going on here. They understand that, okay, we see there's a huge amount of debt in the world. We see what the central banks are doing. And we see other economic systems, you know, growing out of this, being separate and apart. Now, some still have their foot in the private Western Central Bank world and in their part of the world, but eventually parts of the world are going to say, enough is enough. This is not, you know, open, free markets. This is not an open, free economy. This is a controlled system where the central banks own everything.
And Dave, do you think China's going to be the country that's going to make that statement? Because they control their economy from top to the bottom.
I think what's happening, though, is with this continually printing or creating of currency and the debt going to trillions and trillions and trillions of dollars and governments not able to support the debt that they have, this is where the problem is going to come in. Because the people right now, they're losing jobs left and right, not just in the United States, in Canada, in Australia, throughout Europe. And as the revenue continually declines, they're going to have major, major problems because the debt's going to continually rise. Yeah, they're at, you know, zero, negative interest rates, but where do you go from there? As the debt continually rises and the revenue decreases, what happens?
Well, I think what they've decided is that negative interest rates only work to a point, and that's why the Fed is kind of backed away from that, and they're talking about buying assets. And when you buy equities, you don't really have debt to worry about. It never has to be paid back, and they just print up the money and they buy equities. And now the company, because it's owned basically by the government, doesn't even have to create value for its customer because its customer is the government. And that's really the killer of the economy is when you raise the price of a house or you raise the price of a company, but the underlying value of the house isn't doing any more. It's just still sitting there. It's just worth more. And the company could actually even be worth less because it produces less revenue, hasn't invested any money to innovate, to create new products and services, but the price is higher. That gives people a false sense that everything is fine. And if the price goes down, they don't say, oh, well, let's create a better product and service and sell more of it. They say, no, we'll just buy more shares of that company and prop it up some more. And that's the danger is when you have unlimited amount of money to throw at just minor amount of money to throw at knocking down the gold and silver price, and you have massive amounts of money, and if every central bank is buying equities, you could prop up equity prices to where a 40 PE is normal. It's not even speculative. And the reason is they just buy more of them, and that just boosts the price. It kills the economy. It kills the economy.
The economy is continually going to deteriorate because when they're just buying equities and they're just, out there, purchasing homes, buying up the toxic real estate, and more people are unemployed. Corporations, since the people are unemployed, we see that, they don't have discretionary funds. They're not going to go out and purchase in retail. We see retail stores closing. We see everything contracting. Corporations like Caterpillar and many others, their sales are declining, revenue's declining, factories are closing. They can continually buy equities. That's great. But when there's no sales, when there's factories being closed, when jobs are being lost, that's out of their control because the people make the economy. They make the manipulation. They make the GDP manipulation. They make the unemployment manipulation. Yes, they can buy up the toxic real estate and tell us that everything is fine now, but it's sitting on their, they have it all that on their books. They can do all this. I remember like a company like Enron. I remember the Ponzi scheme from Madoff. You remember all these different things. But eventually, the people in that country, like Greece, for instance, they have a huge amount of debt. People aren't working. They're telling us that, don't worry, everything's going to be fine.
Right.
But it isn't. And as this country continually deteriorates and all of this implodes, that's the one thing they can't stop.
No, they cannot create economic wealth. They can only create the appearance of economic wealth by boosting asset prices. But to the employment thing, this gets almost communist total control. They can own these companies. They can force them to hire people, force them to pay minimum wage. And eventually, at some point, you create a worthless economic system that looks good on paper, but isn't worth anything because the goods and services aren't being produced. They're not being delivered. And you don't have a real economy. You have a high stock market and high stock prices, which basically will create what they claim to be against, wealth inequality on a massive scale, because the people running the corporations and the system are going to have their paper wealth up so they can buy real assets, and everybody else isn't going to have anything.
So what is the country going to look like when we go down this path? Because this is your scenario of a collapse, right?
Yes, and it's a different type of scenario because it's a collapse in which more control is gained. And the only way it goes away, I say you don't beat the casino at the casino, and you only win if you play by the rules of the casino. And the only way the casino loses is if you play outside the casino, so you may see some of that, but they always try to cut off your exit points, so you really can't opt out of the system. Or if the casino is closed down, burns down, and new owners are put in place. But if people look to the same people who set this system up and say, okay, well, solve the problem like they did in 2008, and the way they solved it was bailing themselves out, you're just going to see the same thing again. And when people say, well, I don't have a job, and they say, well, don't worry about that. This company is going to give you one. Who's going to complain? People don't see past what their immediate needs are. They're not looking at it that this isn't a real economy. They're saying, well, it is a real job. They're telling me they're going to pay me if I just go to this company, and I'll pretend to work and you pretend to pay me and everything is fine. That's the mental conditioning that people have, is to look to somebody else to solve the problems. And who do they look to? The three that I'm saying have caused the problem: the media, the government, and the central banks. Even though people don't trust the media, they still get their news from the media, other than outlets like this and elsewhere. But for the most part, people look for governments to solve their problems. And if there's another collapse, It's not like they're all going to turn into Miesians and Austrian economists and say, why don't we let the free market? And no one can ever run on that because it means they're not going to do anything. And that's the real danger we're in, is that it's a complete takeover of the economy. And in a sense, it creates a non-economy. So why would these guys want to give that up?
They don't want to give this up. I think in my mind, with the amount of debt around the world, the way the system is run, it's designed not to be successful, not to move forward. We've seen this in the past throughout history, where these fiat systems only last for a certain period of time. Yes, they found new methods to keep it going, by manipulating and creating more and more currency. But what I see them doing right now is having a transition period of restarting the system in a different way. And when I say collapse, I don't mean that the central bankers will be completely gone. I think they'll always be there until we actually remove them. And if they are there after the collapse, they're just going to transition us into another system like we have today. It's probably going to be much worse, actually.
Of course.
And that's what...
If you look at QE, right? QE was an extraordinary measure. Now it is de facto what central banks do when there's a problem. And they only bought sovereign debt, their own debt. Then they bought corporate bonds. Then they made the QE bigger. Now they're buying, then they go to negative interest rates. They change accounting rules. Then they start buying equities. They're going to start buying any asset that you can't nail down, or you can nail down, the student loan debts. So they can continually create credit by creating a demand to buy stuff that no one else will buy. So after they finish buying up all the stock markets, they can buy up all the bad debts, student loan debts, auto loan debts, whatever it is. And that's where I see, this might take a lot longer because they don't want to give up control. So and as you know, these Ponzi schemes, you have to require new money coming in. You have to keep creating credit. Well, they can do that because they can decide to buy everything, and then they can buy derivatives on everything, and they can keep creating currency to do it. So there's really no end to this until the economy is so bad and people want it, they just can't take it anymore. But otherwise, it seems like there's been this, it's gone on where they've done these extraordinary measures that nobody would ever thought that a capitalist society would ever put up with. They've done it, and they keep doing more of it, and they've been doing it now for almost a decade.
Well, I can see that they're moving into another phase, because you mentioned earlier that Yellen was out there talking about doing more QE when they came out that report where they said they can do $2 trillion up to $4 trillion if there is some type of economic shock. And just by those words, just by what they're talking about, it looks like they have something planned going forward, because they're expecting something to occur. And they know they have to create a lot more currency in the world to keep the system alive.
Right. And you heard what she said. She said it may require legislation. And that's a win-win for Congress, because if the stock market collapses and Yellen says, we want to buy equities, but we're not sure if we can, so Congress, let us do that, then they do it. Well, they'll buy the securities at the low point of the collapse, and they'll ride them back up and make the money. And that's the real danger in all this, is that they're going to get carte blanche, because anytime there's a crisis, and really, they're the only ones who can fix it right away by printing more currency. Because otherwise, you have to go through a long slog of, liquidating the malinvestment, which no one in our generation or last generation has even gone through an economic time where basically you allow that cleansing to happen. Ever since '87 with Greenspan, and he's to blame with the creating of the President's Working Group on Financial Markets, they have not allowed a prolonged even stock market correction. And they're not about to start now.
So for the everyday person going through this, what do you think they'll expect? Let's say we see companies laying off today. We see ITT, they closed. Many people are going to be out of work. Caterpillar's laying off.
Cisco.
So all these people are being laid off. Now, where are the jobs? What do they do as the system continually moves along here? And you're telling us that the system is going to continue on, but it's going to get darker and darker as we move forward. What can these people expect then?
It's hard to know what they can expect other than there will be continued government intervention, and that government intervention most likely won't benefit you directly. And it basically helps those that are already in control of assets. So one of the things you should do if you have a job is try to save money. Now, I know they're trying to stop people from saving money. That's why they want to go to the cashless society. That's why they've eliminated interest rates. They eventually probably want to put in the cash as an expiration date on it. So basically, then you get back to the old sales pitch, precious metals, because, they can't really devalue those. They can devalue them on paper, but they actually can't make an ounce of gold less than an ounce of gold. It's still an ounce.
How is gold and silver going to help you in the long run here?
It probably helps you more on the paper side, because unless you're in a situation where you're in barter, that's probably the only time you actually get to really see the value and the benefit of physical metals, where you can actually trade for something physical that means something. But right now, the better place to be, not just the way they've created it, is instead of buying an ounce of silver and making 15, 20, 30% and having transaction costs and have to bring it back to the coin store, they've enticed you to buy mining shares because they'll go up exponentially. And so what they're really trying to do, not just eliminate cash, they're trying to eliminate your ability to act as your own source of wealth. They want it all part of the grid. And that's the danger, because the more people that are on the grid and the fewer people that are off it, the less value your off-grid assets have. Because the people that are making out like bandits are not the ones buying gold and silver. They're the ones who are trading paper contracts, trading mining shares, trading worthless companies that have no earnings. The companies that have no earnings are the ones that went up. If you had Tesla for a few years, LinkedIn, these companies made you money in which you could then take those profits and go buy whatever physical asset you want, like a house or gold or silver if you wanted. But they've actually made owning assets like gold and silver not an attractive proposition.
So going into this fall, a lot of people are saying that the system won't even last throughout this fall. And this is why Yellen came up with that speech where if we see this economic shock, what do you think is going to happen this fall? With the elections coming up, what's going on around the world? What's your viewpoint on that?
Well, with the elections coming up, they will use that, and I don't know how much control they have over the outcome. It depends on who wins and where they want to direct things. If Trump wins, remember the Brexit. They created this gloom and doom. If Brexit happened, the world would end, financial markets would collapse. They collapsed for 3 days, and then nothing has happened. So I don't know. I think in the fall, what'll happen will happen. But I think whatever does happen, they should be able to just prop it right back up. Because if Yellen decides she wants to bring her emergency powers to play, she puts $4 trillion into the system, and then you get everybody else putting their money behind that. Not everybody, but the people with money, the large pension funds, Buffett and those type of people. And they manage to prop up the markets again. That's no fix for fixing the economy, but it fixes the markets. And they have conditioned people to think that the markets are the economy. They're not. They're just a rigged game, but that's how they keep the game going. They're in control of the game.
Yeah, they can prop the markets up, which we've been seeing. But again, I go back to the everyday person where the markets are up, jobs are being lost. And I know you're saying that even if they do create the currency and the government says, okay, we're going to be creating these jobs for you, the government is still borrowing. Trillions and trillions going further and further into debt.
A disaster. Yes.
So to me, I still go back to the same thing. The people eventually are going to force this system to crash one way or another. They can print into oblivion. It's almost like a person with a credit card.
Yes.
When you don't have the revenue coming in to make the payments, you can continue to borrow. Believe me, today they'll just keep giving you more and more credit cards. But when you don't have the revenue to pay for it, something gives.
The difference is, Dave, in your credit card example is he also owns the bank. So he doesn't have to pay it back. That's why I keep coming back to this is much more darker and authoritarian than we think it is, and that we think that somehow this is just going to end. It won't end until everybody, the economy comes to its negative growth, and they tell us, well, we have to expect negative growth.
Well, they were already kind of saying that already.
Exactly.
Yeah.
And that's not true in a natural economic environment. You get deflation and you get economic progress. You don't get what you have now. And the reason we don't have progress is if you invest in companies that don't make any money and they keep going higher, and you never allow the speculative froth to knock those companies down and get rid of them, you got people working at companies all through Silicon Valley. They're working for companies that don't make any money. The money they get paid and the stock options that they get paid are based on the public offering money that the companies have, and are able to continue to go back and do secondary offerings to pay them. So the people working there are not producing, they're not even working, because if they're working and the company doesn't make any money, they're wasting their time, except they're not, because their companies are worth billions of dollars. And that's the economy that we've created, that you can have companies that can be out there for years and never make a dime, and it doesn't matter. And now if the central banks can come in, the Fed hasn't even started buying equities, they can buy these companies and they can save them. You keep these lousy companies going, you could play favorites. Then the other danger is a company doesn't even have to provide a service for its customers, because if its government is the customer, then they can create surveillance products, they can do whatever they want, because they can keep their market capitalization, they can continue to get money into the company because the government will always subsidize them, or the central banks will always prop up their share price.
So you're saying that there's no hope?
You see, there's still remnants of the free economy where companies produce goods and services, and they should always be valued. But what I'm very dismayed about is that a company can exist for 10 years, 12 years, never produce a product and stay in business, whereas a company that can make money cannot go and get venture capital, go public on the fact that they get a 10% earnings margin, that they actually make a little money, because that's not exciting. That's not speculative.
Right.
You might as well just put your money in the bank and pay the fees.
And we've seen this in the dot-com era, where companies were popping up all over the place. They didn't make any money. A huge amount of money was being poured into them. But eventually that came to an end also.
Yes, because you didn't have the level of intervention that you have now. I mean, they learn after each crash to minimize the impact.
Yes, throughout the period, they do continually change to and adapt to what is happening. But from my experience and from what has happened throughout history, there's always a certain point which they always miss, which they don't realize that this is going to happen. And the people around the world who don't have jobs, who, even though the government and the central bank can continually create these jobs for them, continually buying up everything, eventually something, doesn't matter where it's going to be, will stop it.
And it could be as simple as a certain country has a popular vote, a popular upper, whatever it is, and they change, like in Iceland, where they actually remove themselves from the system. Now, it can't be a country like Iceland, because you can ignore Iceland. But if a major country does that, abolishes their central bank, changes the charter of the central bank, a simple change in the Fed would basically be that the Fed isn't in charge of the economy, isn't in charge of employment, cannot monetize debt. If you just said that, don't eliminate the Fed, just say the Fed is just there as a bank of last resort, and that's its only mandate. And you can forget them thinking up schemes of lower interest rates, negative interest rates, cashless society. They're not in charge of that. All they're there for is just to act as a bank of last resort, and that's it. That could be a big change, because then you'd start to see lending based on real lending, and you'd have a private banking sector be more dynamic than rather than if you think about the economy, people aren't thinking, what is this company going to do, or how are they going to make money? Everybody's like, what's the Fed saying? Where are they going to set interest rates? What is the EC? How many bonds are the ECB going to buy? When are they going to stop buying them? That's what drives the economy, and that is not what should drive an economy.
When we see these negative interest rates, 0%, and I know they want to go to a cashless society, but eventually what's going to happen, people are also going to pull their currency out of the bank. There's no reason to keep it in there.
Right.
And we already see some German banks where they're charging their customers to keep the money in the bank. So, I mean, yes, they can do these things, but we can see how this is also going to have a completely different effect on what they're trying to do, unless they get everything in place.
Well, here's what they could do. First of all, in my vision, what happens is even private banks go out of business. And that basically you put everything on the blockchain, you put it all in charge of the central bank, and now you're in the system, and that's it, and you have to play by those rules. So you can't take money out of your bank because there is no bank to take it out of. You get your blockchain cash from the central bank, and that's it. And basically they get to run the economy the way they wish without you having your freedom to do what you want with your money. I mean, Janet Yellen would say, "Oh, it's a shit." You know, one of the reasons they're upset is that they're worried that people are saving money, they're not spending it. That disturbs them that people would actually try to save money. And so if they can come up with a way that you're not allowed to save money because it's cashless, it's on the blockchain, there's no private banks, then you have to spend it. And eventually what I think they'll go to is they've already set the precedent that it's a tax to buy Obamacare. They could say, now you have to buy these other products and services to boost the economy, and here's the price, and we'll just take it out of your account, and now you've contributed your fair share to that whatever sector it is. Or maybe they'll even make you buy equities so you can participate in the upside, and that'll be your pension. What I'm saying is with technology in the wrong hands, they can set up a very compelling control system.
Well, even the blockchain, but that's decentralized. That's not really centralized in a certain...
It's decentralized if it's Bitcoin. It's not decentralized if it's central bank money.
Yeah.
That's the thing. I don't understand why Bitcoin people think it's a good thing that central banks are looking at blockchain technology. It doesn't validate Bitcoin. It means they can now run their own blockchain. And I've heard people say, oh, that they can, the amount of work put in, they can print up the money and have the work done. They are looking at running government issued currency on the blockchain. That's how you be paid. That's how you be taxed. That's how you be tracked, everything.
So what they're trying to do, and I'm going to wrap this up here, is they're in the process right now of creating like a one world type of government.
It doesn't even have to be one world.
A single entity that really controls the world, because like Rothschild said, if you can control the creation of money, currency, you control pretty much the governments. And this is exactly what they're trying to do right now.
It seems to me, Dave, that it is. I maybe I'm wrong, but everything I see being each successive collapse, you see more control, and you see these types of things happening.
So we need like an Andrew Jackson to come in and get rid of the central bank.
Or limit the powers of the central bank. Because otherwise, it's like any entity, once it has power, it needs more power in order to continue to stay in existence. And of course, if it takes a hit and its power looks like it's diminished or its credibility is diminished, it has to come back stronger than ever. That's the danger. So, you get another collapse, they're going to double down. And she's already said it, Janet Yellen. We may need, $2-4 trillion. And why isn't it 10? We underestimated.
It most likely will be.
Right. And here's the thing. Once the Fed does it, then the ECB can do it, then the Bank of England can do it, then the Swiss National Bank can do it, the Bank of Japan will do it. China's not going to be left on the sidelines. What's to stop them from, for your benefit, doing all these things? Because, God forbid you have a recession.
So we as a people, I believe we all need to get together and start a movement to stop what's happening. Will it work? I don't know. But it seems that if we continue on in this direction, the life and the way we know it and the way it was, not just in the last couple of years, but many years ago, it's all going to be gone. And this is where they're moving. They're moving towards having this system completely controllable by them.
It started in 1913, right? Yeah. It's the same with the income tax. Oh, It's just 2%. It's for the wealthy. Don't worry about it. And now it's 40% for everybody. And it's the same with in 1978, they gave the Fed more powers. They're in charge of full employment. What do they have to do with employment? They don't create the environment, the working environment in the company where people need to hire people. It's just nonsense. It's just more power that they have. And the problem with Congress, if you look at some of the questions they ask, they don't even realize that the Fed, even though they stopped QE, I saw this 2 or 3 months ago, that they're still rolling over the interest payments and buying more bonds. They don't even know that. So the point is, the people who run for Congress, they don't know much. So they're not in charge of monetary. So their fiscal policy is just spend to get elected. And then they say, well, monetary policy, what's the difference? So monetary policy just becomes whatever they can do to gain more control and print more currency. And if they have to create more credit to do it, they'll find more things to buy. They're not going to say, this isn't working. They're going to blame, it's always, it's the season, it was the weather, it was unexpected. There's always some reason why whatever they're doing isn't working. They're never going to say that this doesn't work. They'll just double down and do more of it.
Louis, I really appreciate you coming on the X22 Report Spotlight and giving us your viewpoint. Thank you very much. Once again, how can people see your work and what you do?
Oh, you can go to smallgold.com, as you mentioned at the top of the show, SMAULGLD.com. I also have a YouTube channel. I'm on Twitter often.